Good afternoon, Beata Bukowski coming to you with Fairway Independent Mortgage on our weekly economic update. We are talking about the week of December 14th. Due to increased COVID cases and decline in the PPP program, the situation has worsened a little bit on the employment market in the entire country. There were 137,000 more first-time unemployment claims last week, totaling to 853, and the continuing claims also rose by 230,000 to over 5.575 million cases. Hope is on the horizon with Pfizer waiting for the FDA approval on the vaccine. Consumer inflation remained tame in November. And why is it important? Because tame inflation obviously is a detrimental to mortgage bond prices and therefore to mortgage interest rates. Tame inflation is going to keep our mortgage interest rates at low levels versus inflation going any higher, maybe eroding some of that. Consumer Price Index reported 0.2 for the inflation level in November, which reads unchanged year over year at 1.2%. The core inflation, which removes the volatile energy and food prices, was also up 0.2%, so really in line and unchanged in comparison from year over year. While inflation was tame, there was a point to note from the last National Federation of Independent Business Owners on their Business Optimism Index, and that index dropped 2.6% in November to a total of 101.4, a 3-month low. Within the report, the surveyed participants were seeing selling prices rising 3 points to the highest levels since 2018 and only 1 point away from the prices seen in 2008. This data speaks to businesses not having enough people to help their supply meet demand. We're seeing this in the housing market as well, with the supply being very short because we are at about 3.6 to 3.7 months on average, and the demand being substantially higher. The affordability myth has to do with media screaming about properties not being affordable anymore because the median home price increased 15% from year over year. And median is not the measure of appreciation of value. Median simply means that 50% of homes sold under versus 50% of homes sold over that particular price. That's what creating a median price, not how much a certain property increased year over year. Year over year increase in values on average are about 7% nationwide, whereas the median home price went up 15%. So that's the difference. More homes sold at the higher end, and thus moving that median towards a 15%. That does not mean that home affordability has decreased. Appreciation was 15%. Also, to be said and to remember is that 7% increase in the property value translated today with today's mortgage interest rates still means a lower monthly payment for the potential buyer that bought today versus the potential buyer that bought a property that was 7% less but at a higher interest rate. Just saying. I hope you're having a phenomenal week. One last reminder, we are thrilled to be able to offer the most recent IDA product called Smart Buy that will allow us to not only help with down payment for the buyers, but also eliminate their student loan. Please reach out to us for additional information on this. And as usual, concerns, comments, questions, or just to say hi, we are looking forward to hearing from you. 773-321-0008. Thanks much and a very powerful week.